What's going on, everybody, and welcome to another weekly update. And what I'd like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Also, consider subscribing on my X feed at Hemi137, as I do provide a daily pulse on the market there as well. And on here, what I like to do is to provide you guys some current events as well as the weekly updates. So, again, subscribe to both if you will, and also smack that like button so that way we can get this message out there, as these events are really important. Something I've been talking about coming into earnings. Last week we had a lot of major events going on, a lot of very impactful events. It may not have driven the market very much, but it is very, very impactful on how the market will be positioning in the future. And this week is going to be even bigger. Not only is it the Super Bowl week of earnings, with a massive amount of tech companies, we also have monetary policy, Powell, and non-farms all in this week. So it will be a huge, huge week coming up. So something I've always stated is they will essentially flood you with information, so that way a lot of the really important things essentially get lost in the sauce. And that's what I try to do, is talk about everything, that way we don't miss anything, and how 2024 could potentially be playing out, as this is essentially kicking us off for 2024. And also understand that we are coming off of Q4 earnings of 2023, and understand that this is supposed to be one of the biggest buying seasons of the year. And so it's important to see how everything is playing out. And so, with that being said, without further ado, let's go ahead and get kicked off into what's actually going on. So we'll do a weekly recap. Again, I didn't put tons of information. There's so much information going on. So I just wanted to kind of give some bullet points, so that way I can keep track of the things I want to discuss, and then kind of go from that point. So let's get kicked off with earnings. Obviously, we've had bank earnings up to this point. The banks, again, a lot of banks are closing branches. It's extremely important, as they are reducing risk. They may not actually be losing. The bank may actually not be closed, but they are forcing to have to close branches. And that's a big statement, especially from the Big Ten. You can only imagine what the other banks are dealing with at this point. So, up to that point, we first got our first taste of essentially big tech this week. We had Netflix and Tesla. Now, Netflix was important because their subscription base has jumped up yet again. Something I've always talked about. There are certain periods where they're going to lose tons of followers, and then they'll gain tons of memberships. And that is because people right now, again, we've talked about this and how people are struggling with trying to make ends meet. So they look for cheap entertainment. They need some form of entertainment. And so subscriptions will jump up, especially with Netflix. You watch this during the pandemic, their numbers went flying up. And then as soon as essentially the pandemic was quote unquote over, they lost a bunch of subscribers. But at this point, now we're dealing with inflation and, things being priced way out of control. So people are going back to cheap entertainment. So it was interesting to see and how that really kind of plays into the whole narrative in which we talk about on this channel. So Netflix, again, did very well. They have also including sports into their streaming, as they are essentially picking up WWE, Raw, as in most streaming services are starting to do this, as Peacock had started to do this with the NFL during the playoffs, and essentially obtained, I think it was 3 million subscribers just because of that one game. So again, you will see more and more of sports coming onto streaming services, as it is very profitable for a lot of these different companies, and to include whatever sport it is starting to stream. So that being said, we did have Tesla as well. Tesla was going to be a big one. Listening to the earnings call on with Elon. Elon sounded a lot more upbeat, which was definitely a change in his tone from the last earnings call that he was on. Now they did miss, and I will say this: I was expecting Tesla EV side to miss. EVs just aren't doing good in general. You have to understand they're all mixed in together. Ford got essentially is getting obliterated because no one wants to buy their EVs. No one wants to buy anybody else's EVs but Tesla. And Tesla still showed strong numbers. Tesla still has the best selling EV out there, period. I think it's the best selling car, period, out there, to include gasoline engines as well. So with that being said, they still missed. compared to any other auto industry, they are doing phenomenal, phenomenal. And even though despite EV was getting hit, their services has picked up. So you have to remember, and this is something I always try to push, in what something that people just don't understand about Tesla. When they say Tesla, they always just think of the EV car company, but we have to understand it is way, 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 way more than that. And Wall Street still hasn't picked up on the fact that it's not just that. It's also a utility company. Their services has picked up so much that they just barely missed. And it's something that people aren't pointing out. People like to always talk bad about Tesla, but they are. I talked about a lot of these big corporations creating an ecosystem in which they can sustain anything. And we're seeing that with Tesla. Even though the EV sector has been hit hard, their energy business service, utility service has picked up tremendously. You have to understand they also set up all these supercharging stations around the globe that it was extremely hard for any of these other EV sectors to build the kind of infrastructure that Tesla already has. So now, guess what? They have to go off of Tesla's infrastructure because it's already established. And not only to add to that, Tesla has robotics. Tesla has AI. Their full self-driving is way, like, at least 4 years in advance from the research I've seen compared to anybody else. Tesla's EV was the same exact way before EVs took off. So these are things you have to. Tesla's always 5 steps ahead of everybody else, and now they're in robotics, and now they are getting heavy into AI. They will lead in both sectors, in my opinion, as well. And this is why, again, Elon wanted 25% of the company. I don't know if he's going to get it, but I understand, because he wants to be in full control of AI, because AI is a very complex thing when you're starting to deal with artificial intelligence and understand where the power of what it can do. It can influence people very, very easily that are on social media, as most of our lives are lived on social media at this point. So, understand the influence it can have over an individual about the ads they see, the videos they watch. It can generate its own videos if it wanted to, make it look realistic, have all the loved ones' voices that you listen to every single day convince you that this is what what the narrative is. You have to understand how powerful it can get, and that's not even with robotics on that aspect of it. We're just talking about AI. And so I understand his concerns there and why he wants 25% stake, to be able to control what happens with that. And that's not profit driven. And it's more, you got some form of morals being applied to what's actually going on there. So with that being said, that whole sector isn't priced in, and Wall Street isn't seeing it. All they're seeing is the EV sector. And so I think Tesla has a tremendous amount of growth that people just aren't seeing. They think they're done because of the EV sector. Yes, it's going to take a small hit, and also what came of that is they have another 25K car being produced that should be out next year at some point. And we'll also get updates on essentially Optimus, which is a robotics program as well. And they're ahead by leaps and bounds on that sector too. And so these are things that people just do not can comprehend about what's going on with Tesla and how they are vastly different and growing at such a rapid pace. And we're seeing that with them, reducing prices of vehicles. And I'm not trying to fluff up Tesla. I'm really trying to look at the downside, because I am an investor of Tesla, and my opinion is that they're still undervalued, because they're not just EVs and they're not just energy. The whole AI sector in itself is tremendous. The whole robotics sector in itself is tremendous. Any one company establishes, a lot of companies just focus on one thing, and there are multiple things and leading the way in these different sectors. And that's what you need to comprehend on why Tesla is where it is. So when, people are going to badmouth it and Tesla's going to take a dip, in my opinion, this is, again, not financial advice, but that is my opportunity to grab more, because of the fact of where this company is and the potential that this company has. And it has, essentially, in my opinion, one of the greatest CEOs of all time and greatest engineers of all time and innovators of all time at that. So with that being said, Again, not trying to fluff it. I try to look for the downside of it, but there is just too much. Yes, if you want to pinpoint EV, yes, EV in general is just being hit in general, right? Because especially because if you want to mix them all together, yes, Ford is doing horribly bad. But again, they try to throw everything together in a year, try to take advantage of the pump. Nobody wanted them, right? People just want a Tesla. If they want EV, they just go to Tesla. And so that's why they are suffering, but they bring down the whole EV name because of that fact. Also, yes, you're not going to get rid of gas guzzling machines as well because during in extreme temperatures you can't have batteries. But I'm sure over time Elon will come up with a solution with that as well at some point. So, with that being said, we will see there. And then now we also had PayPal CEO updates. They did updates to PayPal's CEO. They have replaced their CEO and now came out. They have essentially like a update onto AI and how they were going to change the world. They announced this a week ago, and then they came out this week and talked about faster transactions and limiting the number of wait times. And you have to understand if you're in any kind of e-commerce or anything like that, time is very, very critical. And if there's any kind of time lapse, people will not purchase if you have to make them fill something out. And so PayPal is closing that gap. And I wanted to bring this up because I think it's very important. This is also one of the ones I'm really looking at on this dip that I talk about. This is the dip. If you're going to buy anything to be buying, PayPal is one of them. And this really solidified that in my mind with a new CEO who I like very much so. If you like any CEOs, I think if you like any company, you should know who the CEO is. You should be watching videos on him and understand what kind of personality they have. I do like the new CEO. I do like where he's coming from. I like his background. And I like all the updates that he provided over the past week. Like I said, he had essentially a laundry list of different updates that they have done to improve essentially the consumer purchasing. And then not only that, having a smart receipt that will essentially, if you know anything about e-commerce and selling, it's a very smart way they approached it in a smart receipt that would essentially provide more products that person may be interested in, so you can get more sales, right? It's trying to keep the viewer more aligned with what's to purchase, right? And if you can keep doing that and then essentially eliminate making buying like extremely easy, one click buys, while also keeping it secure, having AI back all that stuff, is extremely good and very, very smart of what they're doing. And so I was never really a big fan of PayPal. I do think they were too scattered before, but again, the new CEO came in and said, okay, we're going to focus on these 5 things, and then they're going to execute on these 5 things, and then introduce this new technology. And they've actually patented this new technology that was talked about, I think, in the last earnings. So this is, in my opinion, a great kick off, and I think they will start to execute very well. I think by the end of this year and then next year they will be doing extremely well, even given the circumstances. So again, you have to also understand that people still purchase a lot even despite us going into recession. So these are things you have to understand how the consumer works, right? And even if you're not in that sector, understanding how people sell themselves is something that is very important, especially if you're going to be in any kind of market and know where the demand's coming from. So that being said, I really did like that CEO update there. Now, something we're going to switch gears here out of earnings a little bit and go into the fast falling homing prices since 2022. We're seeing a lot of I talked about all the different places around the U.S., and there are certain places like Phoenix, Arizona, California, Florida, New York City are places you want to be essentially watching to see how prices are doing, and they're falling at a very rapid pace. Something I also talked about last week is people essentially transitioning off of a 3% mortgage rate to a 6 to tap into equity because they can't afford living expenses in general. And I bring this up on every video. It's extremely important to know. You can't think we're just going to go right into a bull market. That's not at all what's happening here. I do expect a bull market after we price in a recession. I expect the next couple of years to be bad, but I do expect the market to price in a recession and then recover from that point. And then at some point, the money printer will come back on. And hopefully by then we bought enough on the dip that we can cash in on that. And that's what I'm looking for. So China also this week, we've talked about China a lot last week. This week continues the same song and dance. China begging banks to continue to lend to real estate developers, right? Because they can't even afford the payments. They've been trying to keep on delaying payments, and so nobody wants to invest. And now they're begging them not to. They're stop the short sellers from selling. They're injecting tons of money. They are in a deflationary state, and this is something I talk about. We will get to once the inflation passes. You crush inflation and then insert deflation, and hopefully it's not so bad that you've essentially knocked everybody out of the game. Now you're like, oh, sorry for what we just did, now here's some money, please come back and spend. And again, you have to build consumer confidence, and that can take a lot of time depending on how much damage you've done. And that's where China is at right now, and you need to comprehend how that affects us, because they are talking about, essentially, this is also something I didn't write down, but they are talking about selling tons of US bonds. And that is concerning. And how you think it's not going to affect us when we are on a debt-based system? That affects us tremendously. They start shilling out tons of bonds, we are in trouble, because no one wants to buy our bonds. They are not secure, especially with our current state of the economy, which leads essentially into the next thing, is essentially the Texas border drama or crisis that's currently going on, where Texas is trying to stop all the essentially the illegal immigrants from coming in, and now the administration has stepped in and say stop doing that. And so it's led into this weekend where a lot of states have signed with Texas. They need to stop all this massive illegal immigration that's currently going on. I'm not trying to be political here, but you have to understand that can cause an internal uprise, and that will in itself crash the market. So these are things you need to be paying attention to that can affect the market. I'm not trying to be political again, but you have to understand that some of these political things that go on will directly affect the market. And this is a big one of them. So we'll see what happens there. And like I talked about before, banks are closing. PNC announced 70 bank closures. That was just yesterday that came out. And then we got more news this week about March 11th. The Fed will end bank term funding programs. So essentially, since the pandemic, these banks have really not had to hold assets on the books. They can continue to lend without having any reserves. And so that's going to end on March 11th. This is why the whole March 11th date is extremely important, because you also have, not only will you be finishing earnings, you'll have the March lending program kicking off, and then you'll have essentially the crypto the Bitcoin splitting in April 14th. So we have everything very close in time here that can occur. And what happens after this week could expedite that stuff. And something I've been talking about this week, or seeing this week, is there's been tons and tons of layoffs announced. There's been closures. There's been bankruptcies. They are occurring at such a rapid pace this week. It is ridiculous. And then also to find out initial U.S. employment reports overstated by 439,000 jobs in 2023. This is the pencil whipping I've been talking about. And now, guess what? On Friday, we got non-farm payrolls. Again, more pencil whipping. But what we're seeing and what is being exposed is when you have earnings, you're seeing layoffs. So across my feed, I've essentially seen massive amounts of layoffs, 20, 10%. 1,000 job losses here, 1,000 there, hundreds here. There are massive, and it's not just one industry. Tech is doing another round of layoffs, but it's across all industries at this point. So again, it is getting very, very difficult out there. And this is what I've talked about. Once we start getting all these massive layoffs, people are already pretty much liquidated and looking for ways to just stay afloat right now. So now, not only are you getting massive layoffs, what's happening is people are starting to have to tap into their assets. So, okay, well, I can tap into my equity. Maybe that can sustain us till I can find a new job. The problem is if there's no new jobs because everything's just getting obliterated, now I have to sell my home. And this is where we talk about a potential crash for the homes. But this is one thing, I've touched on this a couple different times, but, this is what could potentially cause a housing crash is insurance. Insurance for owning a home is getting so high, it is becoming almost as much as the mortgage payment itself. people are getting priced out by the insurance. Maybe not so much they're not moving, and essentially the Fed are aware that people aren't moving, they aren't selling, and it's causing inflation to run up. And so now they're like, well, how else can we get a person to move from their home? Well, let's increase prices on insurance. So now you're paying almost double mortgage for, even though you may have a 3%, but you're paying double mortgage because now your insurance has gone up so much, it's 3, 4x. You don't have a choice but to sell your home. And this is once there's enough supply, again, you have to understand the average age for owning a home is up at 49%. So now you're starting to tap into people that are becoming retired or getting close to that sector. So they are essentially will be forced to continue to work even longer after 65, or they're going to have to start selling some of these additional properties they may have that they are renting out, which we're starting to see some of that. And so again, once they start selling off a lot of these things, you have to understand we are getting to a point to where that supply will come flooding in. And when it happens, it's going to happen like we're seeing with the job market right now, where people are just getting laid off by the masses. And so this I think we were down to like 3.7 on job essentially unemployment. This is going to increase by a lot, right? So that 400,000 that they were seeing, we're more like in the fours, if about maybe mid fours at this point, and I could see something up to like 6 when it comes to job losses in the market. And it could, and we've essentially do bank stress tests off of 6% job essentially unemployment, right? And the impact that's going to have. And we've seen that we haven't even reached that state in massive amount of bank closures and bank branch closures and people getting laid off. This is what happens. This is the nasty cycle we're getting ready into. And this year is going to be extremely nasty. I said, normally during the election, it is a very bullish time, but we are dealing with so many big impactful things all at one time. It's going to end really abruptly. And again, that window, I was thinking March. I was debating if March was going to be a window, but now it's more solidifying that they're going to have to do some sort of cut between now and March because of the way things are going, and the layoffs are just piling up. At what point, which will be interesting to see on Tuesday, what Powell says with all these massive layoffs actually occurring. To be honest, when I looked at the schedule, it didn't have Powell in there at 2:30. He normally has monetary policy, which we can look down here. We have monetary policy this week, or we have it right here. We have monetary policy at 2 p.m. Eastern Standard Time on Wednesday. Powell always follows it up. This should actually be 2:30. This needs to be 2:30 Eastern Standard Time because he follows up with any kind of questions. He wasn't listed on the schedule. I don't know if that was a misprint. I wouldn't surprise me if he doesn't show up, because this is a very, very big week. The whole market essentially could crash this week. There's so much big information that can occur. So we got Apple reporting. We got all of the big 7 reporting almost this week, which could be very scary. And then you got non-farms, you got Powell, you got a lot of big events that can occur this week. It's not priced in, which is interesting. It's gone up a little bit, but it's not really priced in. So it will be really interesting week. It's a very, very, very busy, very, very, very important week this week. So we got, like I said, that on Wednesday. Then we got non-farms on Friday. Again, very pencil whipped. So we'll have to see how that does play out. It could get very nasty, very, very nasty very quickly. So just keep that in mind. That will essentially end the monetary policy. Then we have a big gap. There's nothing on February. Then we have March. And then core inflation is probably the next thing to watch when it comes to anything scheduled. And that will be here again on in February. So upcoming earnings on Tuesday, we have SoFi on Monday, which is what I'm looking at. It's not going to really impact the market, but these are more impactful this week. So we have Microsoft, AMD, Google, and UPS. Microsoft holds the second biggest position in the market right now. So we have to really pay attention to what happens with Microsoft. Cloud, AI, doing very, very well right now. So if they miss, that's going to affect all AI. So just keep that in mind. Google also big in AI. That will matter. AMD is going to be very big, although all the chip essentially plays that we've seen so far have been very well. So chips may continue to pump even despite this massive run up that AMD, essentially Nvidia owns almost a whole industry when it comes to chips, and Nvidia or AMD is second to that in a small fraction of what Nvidia has. So just keep that in mind. And then UPS, ultimately, that's not going to move the market, but it's going to give us a good pulse on the market. And what we've seen from UPS, or seen some of these other freight liners, a lot of these freights. Employers are getting absolutely obliterated. So I can only imagine what UPS is going to announce on Tuesday. So that's going to be extremely to watch. And so I was saying there's so much information going to come out this week. It's going to be a lot to digest. Maybe they figured they would just overwhelm everybody with so much information that maybe a lot of the stuff will essentially be pushed under the rug. So this week's going to be very important. Wednesday, we got Boeing and Qualcomm. Boeing's been doing absolutely horrible with their planes falling apart. And then Qualcomm, obviously for the chip play there, we want to see what's going on with them. They are creating a chip, but again, they are just a small fraction of what NVIDIA owns and partially what AMD owns. So, but it's still good to keep them on the radar to kind of see where they're at. They do have a new chip they're trying to come out with as well to try to compete with AMD and NVIDIA. So we'll see. And then Thursday, a huge day. You got Apple, Amazon, and Meta all in one day. And then you're going to follow that on Friday with non-farms. So again, massive week on Amazon. What we want to see there is how well Christmas sales have gone, right? And we'll see that with Apple as well. That's going to be extremely important. And Apple has been tumbling this whole time, so you can only imagine. But the problem is Apple holds essentially they've already been upgrading out, or I think they actually downgraded Apple this past week. And then they've been doing horribly well already to this point. We've seen recessionary numbers in Apple already. We'll see that, I'm sure, in Amazon. But you have to understand, Amazon has that ecosystem like Tesla has. So even though the shopping and everything may recede back and not do as well, they have the cloud business, which is doing extremely well. So it can hold that up to help them hit essentially expectations. Meta, again, looking to see what it has there. I do believe very AI driven. They were talking about buying tons of chips just the other day. So that will be interesting to see what Meta is there. I do really like Meta. They changed it up from what they were before just a couple months ago in the beginning of last year, right? They were $88 and now they're up to like almost $400 now. Again, you can't bet against Zuck, right? He's very smart. He's like a Tesla, and he's very well, but he's not as compassionate as perhaps Elon Musk, and so that's where the two differ. But he's a very smart individual. So, and then these numbers are, like I've stated, it's only 71 for SPX. That's pretty high given that we've kind of been stagnant for SPX. So the markets have been very choppy, but that can change very quickly. They try to price in some. This number will change dramatically on SPX as far as expectations if something does big play out this week. So just keep that in mind. Tesla has lowered quite a bit since it missed. But what I like about Tesla, and I didn't bring this up when I talked about it because I did talk a lot about it, but it didn't sell off that much because people know its worth. The people that have a lot of money know its worth. And the reason why it even sold off was because people, and there's so much bad mouthing going around EV. And something I always talk about, right after earnings, you have to give a stock 3 weeks after the fact. It can sell off during that period. So we'll see if Tesla continues to sell off. I will continue to buy shares at Tesla if it wants to keep selling. More than happy to do that. But people know there's a lot of value there, and Wall Street just is not seeing the value in Tesla. All they're thinking is EV. They're not thinking about the technology stack. They're not thinking about the energy business, which is done. Again, the energy business in itself is essentially exceeded a lot of expectations, especially from my standpoint, because of that fact that, again, the charging stations they already have established, other EVs are having to tap into that thanks to the administration. So Tesla will be happy to help. Sure, go ahead, use our infrastructure, and we'll take a small profit off the top. So nonetheless, we'll watch there. Boeing, again, doing horrible with planes. They have earnings, so they're going to price in a little bit more. Normally, that's around 7. So Boeing's been pretty high over the past couple of weeks. We'll continue to see that this week, and then we have JPM this week. Is JPM really doesn't move much. It only moves up like up and down a point. Again, it holds a lot of weight when it comes to the banks. So again, if there's some big news that comes out, it's all going to flush anyway. So none of that really matters. Or goes up, but it's been going up. So at this point, we're really just looking for a normal pullback at this point. So with all that being said, let's get into some charts and go from there. So like I said, we've made new all-time highs. We're shooting essentially for that psychological 5,000 at this point. Like I said, when we broke, I expected us to break a while back. I'm surprised we actually held back and played around this area for so long. But again, I talked about these cycles. Once we're in officially a pause on rates, the market will naturally push up for like 3 to 4 months. And then we're waiting on that rate cut. And then at that point is when a recession is priced in. We're starting to see the numbers starting to add up that could lead more to recession. So we'll see again where that's what our high is. But as of right now, I'm expecting a very hard rejection off that 5K, because that's just normally what happens. If you've been in the market long enough, you know, especially when you're in price discovery mode, essentially where that we're in, you normally get a hard rejection off of that. So expecting that if we get even up to another 100 points for earnings run up. But again, just waiting for a lot of these numbers are adding up a lot faster again than I thought they would. So we might get a price cut. Not expecting one this week, but you never know. And then once that linchpin is pulled, it's just going to unravel all at one point. We don't know when that's going to be. So you just have to be very cautious playing at these levels. Like I stated, you should have a list of stocks or whatever it is, cryptocurrencies that you're looking at, ready to pull the trigger when this thing starts unraveling. And again, you're going to hear a bunch of fear and everything else. That's the time to buy. Again, if you have a true belief in this thing, again, none of this financial advice, that's when you buy. So we will continue to watch this. Again, if it starts selling off, you're looking for support here around the 4,800, obviously. Pretty strong support here around 47. Psychological numbers, every round number, 47, 46, there's going to be support. A little support here at the 4,500, major support here at the 46. And then, of course, that 4,100 is a very key level. I stated this before when we hit this level before. If it breaks that, I think we're headed to new lows. And so, again, that is the protecting. It's not saying it's all going to sell off this week, but if we start getting some massive pressure down, that's what we're looking at. That 41 is key if we ever go back to that. We're up 900, but who knows on what can unfold and how quickly it can sell off. Again, this is very parabolic. As quick as this went up, it can go down twice as fast. So keep that in mind. So we'll continue to watch and see what happens there with SPX. Let's take a look at Bitcoin real quick. Again, you're essentially having a relief bounce. Could be retesting roughly around this 43, 45, expecting this just to be a higher low and then start continuing to sell off. I really would like it back here around the 30 mark. I think is very much, especially going into the Bitcoin halving. I think we'll see one more last major dip. Again, this is what I talked about, this major dip, cryptocurrencies, stocks, whatever I'm buying on this dip, because they'll start turning on the money printing machine once they kill demand so bad that they try to get it back. Again, the question is how quick is it going to recover? We don't know. It just depends where the consumer is at. And again, you don't want the consumer rushing back in. This is why it's a slow process, because if they start rushing back in, you're going to start having inflation, and it's going to be a big problem. So again, expecting one last more big dip, but we'll see. Even if you want to use a Fibonacci's are good for this, but one thing I found, this is why I use supply and demand, because supply and demand already kind of finds these zones for you anyway. So really fair value is roughly around the 30K mark. So we're still looking around that 30K mark would be essentially your buy zone. So anything under, essentially, in my opinion, anything under 35, I think is going to start being buying at that point. Again, not financial advice, but that's what I'm looking for there. Then start taking a look at some of these other ones. Tesla, again, it's starting to sell off. This is when you want to be buying, not when it's screaming to all-time highs. You want to be buying the sell-offs, because then you get these parabolic moves. So really, there is a wedge that's being created on the weekly here, and it's kind of giving support around that 150. Unless there is some massive selling, I'm not really sure Tesla can get much lower than 150 unless there's pure panic in the market. Then it's pretty much game on after that point, which is very much a possibility with what's going on. So, but 50 is a strong 150 is a strong support for me. We'll go from that point. If it wants to continue to sell down, I'll continue accumulating. But really watching that level again, key level, we might get a retest back up to the 202 here, but ultimately aiming for that 150. Again, it's off cycle now, so Tesla's essentially on the sell-off mode and for the next 2 to 3 weeks. So expecting it to at least hit 150 at some point here. Again, depending on what news and everything else may happen, it may go lower. Just be wary of that. But that's what I'm watching there. And then Palantir, again, finally broke this kind of wedge that we got here. It's not the greatest of wedges here. There's been really strong support here at the 1428. And then again, you need to break up over essentially this $18 mark, and then the 21 or 22 marks really being kind of the high as of right now in this current cycle. So we'll see what happens there. Hoping it breaks here so we can get down to the $10 mark again, but we'll see. I do like Palantir a lot because of the fact it bridges that gap to helping, can really help with AI learning model. On what they do with massive amounts of big data, and being able to make that useful is extremely important, especially when you're talking about AI models and training AI models, which is probably the most expensive part of any kind of AI, is being able to train it and having the data and make it useful. And so that's where Palantir comes in. And to be able to do that. So I think they can, again, they're not just, governments or anything like that, even though they have a lot of contracts, they do help a lot of healthcare as well, to make use of all the big data that they're having to deal with. So again, I think it will be a very important one. So this is another one I want to be buying on these dips moving forward. And so I'm going to bring up PayPal because I think that, again, I've talked about this. It had the hype run up with that very important all changing, and then everybody just sell off. But I do really like this one, and I'm looking at support here at the 58 and then the 50, and then if they're selling lower than that, again, I think they will be leading. I was never really a big PayPal fan before, but like I said, I'm with the changes they're making now, I really do like them. Their balance sheet is really good. And again, Wall Street just isn't seeing it. So I really like what's going on with PayPal moving forward. So I will be looking at these levels on the sell-off as well. So with that being said, let's take a look at BA. It's been a long video already. There's just a lot of information. There's been a lot of bad news on BA. So we're seeing that ramp up and then sell off twice as fast. Watching that 176. Again, this is backed by the government. So this thing moves completely weird. But I think it will break 178 at some points. If you're trying to go long, definitely could buy there and see if it pops. But again, depending on the market sentiment, if the market really starts selling off, I could see us butter through this 176 pretty easy. It does need to break through this 200 mark first. It's been bouncing around right now. Let's see if it starts consolidating here. Like I said, for a long time, it had a very big consolidation period back here for many months before we started getting some massive moves out of it. So again, it plays big into how the market in general is going to move. So we'll see what happens with Boeing. And then again, right now, the resistance is sitting at 220. And then right after that is that 238. So watching that there. Then, of course, our last but not least is JPM, which is sitting around its all-time highs. So we'll see how this does. Again, if everything starts really selling off, we start getting more bad banking news. Again, there's a lot of regionals that are mixed in there as well. Any kind of news just exposing the massive amount of debt that a lot of these banks are under could start causing this to sell off, or things you got to watch. So again, if it breaks past the all-time high, this 176, it's in price discovery mode. So you just got to kind of let it go from that point. You have to wait to establish these zones, which can take time. So, but if it goes to the downside, really kind of watching that 158 mark. And then watching this 140 mark, and then again the 120. I think eventually it'll at least be down here at 140 again, just on a pullback when the market's going to start naturally. Once we get past this week, we'll start getting a slow natural pullback because all your industry leaders have kind of reported. There's still going to be a lot of other big earnings after this week, at least for the next week or two after this week. And then the market will start making a decision and start moving from that point. And that puts us right in the middle of February. would essentially kind of gets us a lot closer. It gives us another core report, gets us a lot closer to what's happening with the banks when they're moving into that March 11th deadline. And again, some very interesting times in the next couple of months. So again, it's going to dictate how the rest of the year is going to be played out. So, and again, it's that natural pullback that I talk about all the time. We get one of our biggest natural pullbacks after this earnings cycle. So just be mindful of that. So with all that being said, if you made it this far, go ahead and drop a thumbs up. And until next time, I will see you guys later.